Good morning, folks. Bo Yoder here, www.boyoder.com, or for this video on my video blog at tradingaintpretty.com. Wanted to show you a classic tape reading entry, which is kind of showing itself here. Market's been selling off, and as you can see, it's trying to form a little bit of a higher low here. Actually, let me not blab my way out of a trade. Let me go ahead and take a quick pause, grab my fill, and I can get back to telling you about why this particular price pattern interested me. Alright, so basically we got a market that's selling off. You can see the extreme weakness beginning in the pre-market that has now taken us down. I think the Dow's about 70 points to the downside as I write this. Pretty much every chance the market has had, it's broken down to a new low, broken down to a new low. Now all of a sudden you can see the volume drying up. That's your first indication. If the volume's drying up, that means there aren't as many orders. If there aren't as many orders after a sustained move, it probably means that most of the folks who are interested in selling or getting short in the market as part of this sustained move have been satisfied. Those orders have been filled, and now everyone is waiting for the market to resolve itself. That can be seen here as the market pushes lower and lower and lower, and now for the first time we can see a bunch of different bottoming tails here, including this bar, which is really my trigger bar, as the market tries to form a higher low. Now if the higher low forms, and this bar ends up as a reversal candlestick, that will be a buy signal for many different trading styles. And really, I find that there's very little advantage to waiting for confirmation. You end up just destroying your risk to reward ratio for essentially the psychological comfort of taking that trade. So I got in at 824.25, almost up a buck here. And the higher low is really developing. Now again, this is a trigger point. This is a tape reading, chart reading type entry. Market hasn't really formed a pattern yet. It hasn't confirmed anything. I'm just looking at the clues the market gave me. Smaller liquidity might mean that the selling has exhausted itself. Higher low, if it forms, as you can see here now, could trigger a good solid surge of buying to the upside and offer me a nice little chance to grab some day trading profits out of the S&P. So here we go. It's perfect. We got the aggressive entry already up about a buck. My stop's just under the low here, since a higher low is not a rinse type trade, and therefore you don't have to have quite the same levels of padding that you do for something where you're going to be really getting long or short against support or resistance and trying to hold through the wiggles and the whipsaws. This is just a quick reversion to the mean trade. The market is oversold. I think it's going to bounce. As soon as it bounces out of its oversold condition, I'll take the easy money and walk away. That's the classic definition of a day trade. So it's about 11:28 as I record this. This bar is closing near perfectly. I've got about 2 minutes left in the bar. Rather than force you to sit here for the next 10 minutes or so, I'm going to go ahead and pause, and we'll accelerate time and come back if there's anything new in the price action that could use a comment. And we're back. It's been about 5 minutes. See, the market's showing a little bit of resistance here to the 20-period moving average, and that really is the important pass-fail point for this particular trade. That resistance has to be overcome for this to move up in the area I want it to go, namely 828 to 830 or so, into this area of prior chart resistance. Again, I can just kind of highlight that for you by drawing a line here. You can see how that previous low, once broken, now should become resistance. And actually, you can see it became resistance there when tested right after the breakdown. So we've got to break above this area here. Again, kind of highlight it. This is our zone. We can break through that, the lower end of that zone. Probably going to move right up into the upper end of that zone, thus delivering my payday. So right now, not a lot to do, but this right here is the moment of critical juncture for this particular trade. It's either going to pass or fail itself based on how it reacts to that resistance. So give it another couple of minutes. Hopefully we'll have broken through the 826 resistance level and be trading around 827, 828 when we come back. And here we go. We're kind of pushing up here, up through resistance. I'm going to go ahead and delete that line so you can see the price action as it breaks up through. But I really want you to notice here that this is not pretty, and trading ain't pretty. This is basic, grinded out, profitable trading. Trading the S&P here with an entry around 824. Basically, every one of these horizontal lines is $100 per contract. So we're looking at $1,000 if you're trading a 10 lot, $2,000 if you're trading the 20s. So The difference literally between entry and where we are now is about 2,000, well, a little bit more than that, about $3,000 on a 20 lot. Easy to do. It took basically a morning of sitting here in order to set up that trade, really my first trade of the morning, but it's a decent hourly wage. We're waiting now for the market to break up above this little peak here. That's another tiny resistance level. And once it does that, it's pretty much going to accelerate through those zones as I wrote before. And hopefully we'll see it testing just below the 830 level here in the next bar or two. Normally after a break, you're going to see some digestion, as we see now, a little bit of a red bar forming as it digests that breakout, and then one final push up into profit objective. So we'll go ahead and sit it back on pause and wait for it to get up closer to the profit objective. All right, decision time. The market moved up to 828 as expected, and now is tailing back off. If it forms a topping tail here, it doesn't necessarily mean the trade is dead, but it does mean that I'm going to have to hold a wiggle. And that wiggle is probably going to take me back down towards 825, 826. In other words, it's going to be a negative excursion. Not really sure I feel like that at this point. We're coming into the doldrums. It's about 11:30, which is usually the end of my my hot period. I tend to make most of my money between 9:30 and 11:30. So kind of coming to the end of the period where I have the most edge. Up about 3 points here. I think it's probably time to take it, put some money in the bank, and walk away. So it's we got about 1 minute left on this bar. I'm going to go ahead and let how this bar closes determine my my action. So again, just kind of sitting through about another 30 seconds. I'll go ahead, pause, and set up my sell order, and we'll see what this can deliver. If it heats up as it's doing now, closes near its highs, I'll definitely give it another 5 minutes. But if it closes back down on its lows with a big topping tail, then I'll go ahead and take my 3 points and move on to the next trade. All right, so we're looking pretty good. We're up above the 828 area, zooming up now to test moving average resistance around the 40-period moving average, which is my red line on this chart. I don't think that's going to hold it, but I'm certainly watching. Now I'm into my exit zone of using discretion and using my eyeballs to try to pick the short-term top. Now, there is definitely some resistance from the lows of these little tails, and we're kind of testing that. So I have my finger on the sell trigger here. Up fairly decently, 4 points and change. That's a nice little trade, a little more than 2 to 1, and it looks like that resistance is in fact kicking in. So I'm going to go ahead and pause, take my profits here at probably 82 or 828.50 if I can get it, and we'll sum the trade up when I get back. All right, done, and done. So there you have it. Not the prettiest trade in the world, but trading ain't pretty. It's not what it's about. It's about making money, and there you can see a pretty predictable, pretty consistent scenario. Middle of the morning, market extension, trade the bounce, catch a couple of points, and walk away with your money. Real easy to do. Obviously, with this market, you can trade a 1 contract 10 or 100 with this kind of a style. There's plenty of liquidity for everyone. And just on a 20 lot, like I said, each one of these lines is $2,000. So we're looking at like what, 4 or 5 grand on what was essentially about a half hour's worth of work. Gotta love it. As always, thanks for listening. My name's Yoder. Good luck and good trading.